welcome to the Morningstar series Market Reaction. I'm Emma Wall and I'm joined today by GAM's Rob Mumford to talk about China and the Fed. Hello, Rob.
Morning.
So we heard this week that the Fed has taken a slight change in tack when it comes to interest rates. And we're sitting here in Asia, and of course central bank policy in the US doesn't just affect the US. What impact is that decision going to have on China?
Yeah, not just a subtle shift, quite a dramatic shift. December they were talking about further rate hikes ahead. Now Fed Fund Futures saying actually perhaps the next move may be down, not up. So a very, very big shift. It's positive. Obviously markets had a very tough time last year, and it was all about a tightening path in the face of actually what looked like slower growth, particularly in this part of the world. So the markets have reacted well, and I think that's right.
And do you think central bank policy, be it in the Fed or be it localized in Asia, in particular China, has a larger impact on markets, or are we still going to be dominated by trade war rhetoric this year?
Yeah, obviously US monetary policy guides global monetary policy, and again, that was the problem last year. We had this real withdrawal of liquidity as the Fed tightened, and also as you saw the Fed balance sheet contracting, and I think the other dramatic shift the other night was talking about the balance sheet contraction specifically, and how they may adjust that. So yeah, US monetary policy guides global monetary policy. Big impact last year. We saw that deficit countries having to raise rates again, putting a lot of pressure on equity markets. So the fact that things seem to be leveling off at least, very positive for equities.
Does that mean that you are then bullish on Chinese equities for 2019?
Yeah, China, is one of the key worries. So we're worried about tighter US monetary policy, and we're worried about the path of China growth. What we saw before the US shift obviously was significant both monetary and fiscal announcements coming out of China from the second half of last year. So the path of growth in China is still a real worry, but we had a much earlier policy reaction, and the pace of that reaction seems to be accelerating. And this is where we should touch on the trade issue, because clearly, global tariffs is a tax on growth. And if we're worried about China, particularly worried about that segment of the economy, highly indebted, very narrow margins, slow growth is really bad news for them. But what we're hoping, anyway, at least at this point, is that the policy responses will lead to actual real economic response, but it's not going to happen until the second half. So we're positive on China equities from a valuation standpoint, from the path of policy. The jury is out in terms of the effectiveness of that policy, and we're positioned accordingly.
And I suppose also one should not underestimate the power of sentiment, having the Fed hold on rates and, as you say, even indicate there may be a cut in the next decision making. That has caused positive sentiment to flow back to China even before we see the policy impact in the second half of the year. Could that be enough to lift markets?
Yeah, I think so, and we're talking about markets, but also the real economy. And I think the overhang of what the Fed was doing and what was going on in trade. I think when we look across the border, many people are becoming more defensive in terms of their activity, and this causes a real problem in terms of liquidity and in terms of cash flow management. So yes, I think from both a real economy standpoint, I think there'll be positive, and from an equity standpoint, obviously we've already seen markets very strong early part of this year and the last few days. Definitely a supporting element. There's concerns out there, but from an equity standpoint, which, the end of last year was just discounting quite a sort of severe pullback, if not recession, too much, particularly in the face of policy response.
Rob, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.